Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be talking Bitcoin. We're going to be talking about the weekly position, the weekly candle, and where the bulls are going to want to try to get the price to, and where the bears are going to want to try to drag that price down towards in order to kind of get themselves in a stronger position for next week. As I get into this video, if you find it useful, informative, maybe even entertaining at times, then why not go ahead and smash that like button? I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe by tapping the bell and selecting all the notifications. You will not miss another video update. If you haven't yet joined us in Discord, linked in the description below, check it out. I think you're missing a trick if you haven't yet joined. It is the first place that we go to notify you of everything that is going on in the crypto space, and it is a fantastic community talking crypto 24/7. Okay, let's get into the main event, what you've come here for, which is, of course, Bitcoin's price action on the weekly time frame. We'll be taking a look at Bitcoin on the weekly for the obvious reasons, but we'll also be taking a brief look at that daily time frame, because those daily positions can also help give us an indication as to kind of where things may end up by the close of play today and what that might mean for next week as well. So what we're going to do is we're going to start things off by taking a look at this weekly. We'll jump down into our daily as well, and we do have another view here as well for the weekly. So let's go ahead and talk about what's going on here to start with, right? So here we have smart money concepts, we have EMAs, and we have the Gaussian channel. There's three things going on here. Okay, so I can turn these off and talk through them one by one. But for the most part, a lot of these things are actually kind of coming together quite nicely. So what I'll do is I'll turn the Gaussian channel off there, and we'll talk about smart money concepts in the EMAs, and then we'll turn the Gaussian channel on and we'll focus on that. Okay, so as you can kind of see here, we've moved up from the lows. Okay, the low that we have down in November, this one being the $15,476, at least according to Binance on the USDT pair. Okay, here we can see that we left two fair value gaps. Okay, these fair value gaps are this green one here and this light green one here. Not the dark one at the bottom. That is where buyers currently sit. Okay, so buyers are looking to basically come down here, and they're looking at that range to buy. Okay, so we are specifically talking about these light areas. What are these? These are imbalances in the order books. Essentially, a large order came in here, okay, but was unable to kind of fully get completed until we were up here. Okay, this is different on the different time frames. So basically, it's the length of this institutional candle. So a lot of buying pressure right in this range, not enough sellers. So price has to go up and find where the sellers are, and the sellers were higher in the price chart. So when you see an imbalance in the order books like this, too much buying and not enough selling, price will move up here into the higher ranges. And it also works in the other way around. If there's too much selling pressure and not enough buying, price will go down to where the buyers are, right? And so there's these imbalances in the order books are very important to the price action when it comes to smart money concepts. These are typically an indication that big money has come in here and pushed the market in an upward direction. Okay, so we've left two big fair value gaps. And when it comes to fair value gaps, these do have a tendency, although not a guarantee, to get filled out. And what I mean by that is price likes to come back down and basically make sure that liquidity comes back into the range that there was none previously, or very little liquidity previously. So price likes to come back down and fill the gaps, okay? It's not a guarantee. Sometimes it can take a very long time to play out. And if I zoom out of this chart, you'll notice there are none on this Binance USDT pair chart, but you can of course go to a Bitcoin USD Bitstamp pair, and we zoom out of this one, you can see that there's some fair value gaps that were left behind in the real early stages, 2013 and early 2013 down here, right? When price was $30, or price was $130. Okay, so there are two gaps that were left behind. Other than that, all other gaps have been filled out, right? And so it's important that we reflect on what that might mean for the price action of where we currently sit. Okay, yes, these could be left behind and we could just go up into a bull market and forget about these. Unfortunately, I don't think that's probable. I think the most probable scenario here is, considering we've been filling all gaps since 2013, that we probably are going to be filling these gaps too, okay? Unless, of course, you're going to sit in that bucket of this time is going to be different, which, you know, it can be. There's no guarantees here. But, you know, logically thinking, since for the last, 10 years, we've been filling these gaps out, you'd think that we're probably going to fill these gaps out. Okay, so on that note, where are these? Well, On the one that we're kind of in right now, this is 22,602 to 26,601. So this particular range here is a move that we're likely to see at some point, okay? And we're probably going to have to bounce from that lower range, right? So we're probably going to find that this is going to be a good, strong support area around 22,600 or 22,500, right in this kind of lower range, right? We're probably going to fill that out and bounce from it. How high you bounce is the question, and maybe you find resistance on the higher range at 26k or 28k or whatever, and then break back down again. The second one, the lower one, comes in at 17,126 and the high of 20,407. Okay, so again, you're seeing a bit of slippage here to take us down into those ranges, okay, and gets you into those lows. But obviously that's quite bearish, right? Not necessarily what the bulls are going to want to see. So on the bullish side of things, we are currently finding support on that 50 EMA. We can see that right in here. Yes, it's come into our fair value gap. We haven't filled the gap, but we are finding support, and it's on the 50 EMA at the moment. I do think that the bullish case here is a little on the weaker side. We can kind of see that within the structures and things that are going on. They haven't really got a lot of control. And if they do lose the 50 EMA, the next pit stop, realistically speaking, is going to be right around 24k, and we could probably think about testing the 200 EMA at that point, which comes in at 24,119. I do think that we'll probably find brief support on the 200 EMA if we do lose the 50 EMA. Okay, so it's not all bearish. I think there's definitely some support to be found on the ranges here. We're not going to be talking about straight drops to the downside or anything like that, but I think we should be aware that the bulls appear to have a slightly more control here in terms of the structures that have occurred, and the fact that the bulls have had a bit of a run for the last few months. It's probably time that the bears take control for a little stint here. So I'm thinking support, although it's brief and has been found, is likely to get broken. Okay, now we can compound this down by taking a look at our Gaussian channel. Okay, so our Gaussian channel, we are kind of following it to the downside. Now we are closing consistently inside the upper band of this channel at the moment. Now, historically speaking, the Gaussian channel has been fantastic at predicting bullish and bearish markets. If we closed inside the Gaussian channel from a bull market high, then we went down into a bear market low, and vice versa. When we closed inside the Gaussian channel from a bear market low, then we saw ourselves in a bullish market. However, there's a lot of inconsistencies and underlying differences in the variables at the granular level. And what I mean by this is we've done a lot of things rather differently than what we had done in the previous couple of cycles. Okay, and I speak about this a fair amount because if we want to be predictive over what is going to happen next, then we need to see the same setups, right? The same underlying variables need to be the same, or the variables that sit at the granular level need to be the same time and time again, right? Because then if you've got the same setups, then you can expect the same result. However, if you have different variables at that level, and we talk about these from time to time, then it's going to be really foolish if you're going to be expecting the same result even though you've got a different setup, right? It doesn't quite work that way. And in fact, I don't think anything in life really works that way. So I do find it quite illogical when we see a lot of content put out there on Twitter and various other social media platforms that is basically saying, look, we're doing exactly what we did previously. They copy some candlesticks, they throw it onto a chart, and then they kind of say, look, we're doing this. And they kind of call it ghost bars or whatever. So, for example, if I come into here, I think it's bar pattern, that's the one, right? If I grab this bar pattern here, for example, right, and I move this bar pattern over to this area here, this is kind of the stuff that you see, and people are like, look, we're going up here, we're going to be targeting 50k, right, because we're doing a very similar kind of thing that we did in 2019, for example. And it doesn't really work that way because we know that there's different variables of different things that occurred to get us to that bear market low in 2018 that is vastly different to this current low down here at 15,476. Okay, and these are fundamental things that really have an impact on future price predictions, right? And so kind of swing this all the way back to our Gaussian channel. Our Gaussian channel has been fantastic at predicting bullish and bearish markets when we had very specific setups that were the same. Now we've got a different setup. Okay, we've gone down deeper than the previous all-time high for the first time in Bitcoin's history when we crossed lower than $20,000, right? And we've also gone down deeper than where we sustained previously from a Fibonacci level. For example, in 2014's bear market low point, we went down to the 1.236 Fibonacci level, okay, on an ABC structure. We then see that also in 2018 that we moved down in a three-wave pattern, ABC, and we stayed above the 1.236. These are to be expected. That is a typical kind of structured move for a three-wave count to stay above the 1.236 extension on the fib levels. However, in 2022, over here, we've actually gone down deeper than the 1.236. We went down lower than the 1.382. We didn't hit 1.618, but we hit lower than 1.382, and that's a big fundamental change. Not only did we go down lower than the previous all-time high for the first time in Bitcoin history, but we've also dropped down lower for the first time for Bitcoin's history than the 1.236 in a bearish market. And these things have a profound effect on how these indicators work, right? It's going to be really difficult to think that you're going to have a predictive indicator such as the Gaussian channel when you've got something as fundamental as a Fibonacci sequencing difference between those bearish and bullish markets. So although this looks really positive, I'm not optimistic just yet. I really want to think about what's gone on, what's happened, and I think what is potentially going to happen here is that this Gaussian channel is going to lose its predictive capabilities unless, of course, those variables return. And so what I mean by this is I think the Gaussian channel can be used to predict out these bullish and bearish markets if, of course, the variables that drove that corrective action remain the same. So in the next cycle, if we stay above 1.236 and we do not drop down lower than the previous all-time high and those kind of things, then I think the Gaussian channel has a pretty solid chance at being pretty predictive. But for now, it is what it is where it sits, and ultimately it's a glorified averages. So considering how deep we went, I think the Gaussian channel can potentially continue to drop down deeper because it's a glorified average over a long period of time, and we might start to see that that the price action peaks above the Gaussian channel temporarily, and then I think it will come back down, and it might look like a false flag. I think essentially that's probably what the Gaussian channel is going to do. So let's talk about what we think the bulls are going to want. Okay, so if we think about the numbers, the target ranges that the bullish people are going to be trying to target at the moment, I think realistically speaking, the bulls need to get the price action above $28,000, and I'll jump down into the smaller time frame in a moment just to kind of talk about why I think around 28K is going to put them in a slightly stronger position. It might even be slightly higher than that. And the bears, of course, are looking to break down deeper than the 200 EMA on this weekly time frame. And essentially, that comes in at $24,118. More specifically, the number that the bears are looking for is $23,900, because if they hit that, they've actually then got control over the structures. So let's go down into that daily and talk about that. Okay, it's down here, that 1.618 target. So the bears are going to be targeting 23,937, and that's going to be right there. The bulls are going to want to try to break structure. In order to do that, it's actually 30K that they need to breach, right? It's up here. So it's going to be 30,036. Okay, so that's the area that they're really going to want to try to push the price higher than. So then we start thinking, what's going to be the easier move here, right? We kind of see ourselves with a 10% move to kind of get the bullish of the bulls back in control, and we've kind of got ourselves a 11% move to get the bears in control. So although I say and I still think that the bears have the upper hand here, we can see just from a percentage point of view it might be slightly easier to get the bulls back in the swing of things by staying above or getting above that 30K range. Now the other thing that's notable here on our daily EMA time frame, okay, and that's not necessarily overly apparent here on our weekly. I mean, on the weekly, we see the 50 EMA as our support, but on our daily, we can see that daily 50 EMA is acting as our resistance. So chances are we get rejected and those bulls still have control. We break down, we look for the 200 EMA, which currently comes in, I think, at 25K. 25,036. So essentially, that's kind of looking like the next pit stop here for BTC. And you can see here as well, we had this really interesting range. I'm not sure what this whole entire target range is about. Specifically, I think this might be a structure from a smaller time frame. But what's really interesting to me, if I just pull that across here, if we take a look at this fair value gap right in here, we can see that that area has yet to be filled out as well. And you can see that would coincide with our 200 EMA. So I'm thinking rejection on a daily from the 50 EMA down towards the 200 EMA. This is also a support range and would fill out this fair value gap that was left behind. It would also fill whatever this is. I forget what it is. It's probably from a smaller time frame. So it's probably quite an important one, coming in at 25 to 26K. So essentially it does look like the bears have more control on the smaller time frames, and the bulls potentially have control at the moment on this weekly, but they're not really showing their strength at the moment. So essentially we have our two targets. We're looking for either 23K to kind of concrete the bears with their structures, and we're looking for 30K to break it all down, and or to have a break up to 30K to break all of the bearish structures and continue a move to the upside. So we see this on these weekly positions. We expect volatility on a Sunday, because Sundays you see the bulls and the bears trying to fight out to try to get that weekly close where they want it. If we do happen to close below that 50 EMA, that's going to be really unfortunate for the bulls on our weekly time frame. Anything above the 50 EMA here, which puts us at 25,779, will still just be, you know, mid-ground and not really conclusive. So keeping a close eye on it, but for the most part, I think we're going to be in the bearish situation. I think the bears are going to grab the control and push price down. But let me know what your thoughts are in the comments down below. I'm going to leave the video there. If you found it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.